when you don't understand how this process is supposed to work, and they say something like, they wouldn't say, I work for McKay Mortgage. That would be illegal, but they would say, I'm calling about your mortgage application with McKay Mortgage. And now it sounds like they work with me, and they get that person to start talking to them. And now it's just at a time when this person probably just went under contract on a home, and they have you calling them. They have a home inspector calling them. They need to do this. They need to send an earnest money deposit. They have a million different things going on, and their phone's exploding. And God forbid they do pick up. It's confusing, and it just gets what's already a complicated, stressful process off to a terrible start. And starting next week, that should all be more or less a thing in the past, unless somebody decides to opt into them.
So today we actually have Brendan McKay. He is the Chief Advocacy Officer and Co-Founder of the Broker Action Coalition and is the lead strategist behind its 3-year national advocacy campaign. He is recognized for his expertise in the mortgage industry policy and consumer protection. Brendan also owns McKay Mortgage, bringing direct industry experience into his advocacy work. Brendan, thank you so much, and make yourself at home.
I will. I appreciate that. And advocacy is in my job title. It took me a couple months before I was able to say it without stammering too. It's a tricky word, so I understand completely.
Brendan, thank you so much. Your journey started, you started this fight back in 2022 when the Broker Action Coalition was brand new and what kept you going during the setbacks before the Homebuyer Privacy Protection Act was passed?
That is a great question. A number of things. I went into it never expecting it to be easy, but I continued on knowing that we were clearly on the right side of this argument. And as long as we were persistent, it was a matter of when, not if.
Yeah.
And I knew that. I knew it from the beginning. I knew that we would get there. And that, frankly, passing federal legislation is hard, and it should be hard.
Yeah.
Congress just passing law on a whim, it sounds great and it sounds efficient and streamlined, but it would probably lead to a massive amount of larger problems than, God forbid, we already have. So I went into it with those expectations, and 3 years it sounds like a long time, and it is to you and me, but that's light speed on Capitol Hill. And there's progress along the way. I always tell people, the world of DC, it's very rare that you get tangible signs of progress. But every time a co-sponsor got added, we would celebrate it and making sure to make a big deal of every step of the way. Yeah. Because in general, I try not to be a results-based thinker. I have goals in mind, but the process is what matters. And I think there's a lot of value in celebrating the process, not only from a pragmatic standpoint, but a psychological one as well. So we did a lot of that, and we had amazing lobbyists that gave us a lot of perspective and things like that too. It was a goal, but I don't know, man. I could feel us making an impact, and even just when the credit bureaus started taking us seriously, I was like, all right, good. They're in the fight. That means they're scared, which emboldened me and the brokers that are part of the back even further. So every little step along the way, and that's not to say there weren't times where I was just oh my God, what the hell are we doing here? Those moments were fleeting and would pass very quickly. Yeah.
That's life. We all have to celebrate the small wins. Shoot, how many times that you made it through a day that was just frustrating that you're like, okay, I'm not cooking tonight. We're calling for takeout. That's a small win. Yep. When it's been a long day. Now, all right. So for all of my folks, help them understand what the Homebuyer Privacy Protection Act is.
Absolutely. So if anyone has gotten a mortgage, whether buying a house or refinancing in the last couple of years, they're going to know exactly what I'm talking about. And if you don't, talk to a friend and they will know. So the minute that you apply for a mortgage and the mortgage company pulls your credit, the credit bureaus, being Experian, TransUnion, and Equifax, sell your information to solicitors because they know you're in the market for a mortgage. And what happens is your phone blows up with hundreds of phone calls, texts, emails. It is violation of anyone's most basic data privacy expectations, right? Yeah. That is called a trigger lead. So Homebuyers Protection Act, wonderful technical name. Colloquially, it's known in the industry as the trigger lead bill. Okay. And what the legislation does is it stops that. It says, credit bureaus, you're no longer allowed to sell consumer data without their permission. They either need to opt into it, or there's a couple exceptions where the company that's servicing your mortgage is able to use them, or the company that did your last mortgage is able to use them. And we're taking hundreds and thousands of phone calls and making it one or two. And if you're a first-time home buyer, you can probably expect to get 0 phone calls from this point forward. It was a massive win. It was a huge nuisance, to put it lightly, in our industry. But as I said, like, it's just a violation of data privacy expectations. And I know that our world is not short of those sorts of violations, but this is the one that was in my space, and I felt like I had the expertise to jump in and try to fix. And 3 long years later, we were successful. And as we sit here today, which is February 25th, the law actually goes into effect next week. It had a 6-month moratorium, and it goes into effect next week. And that should be that. So super stoked about it.
It is so amazing because I always have that conversation with all of my buyers beforehand. I try to, and we do it with sellers as well, but we typically tell them, hey, look, you're getting ready to apply for this. Your phone's going to blow up. If it's not somebody, you can ignore it, but your voicemail is going to be full at the end of the day. And I try to prep everybody for it, but it wasn't until, I want to say, the beginning of this year that I actually heard this was going into effect.
Yeah.
So it's been underground for a very long time.
If you jump into the mortgage industry communities on LinkedIn and Facebook, it would have been all you could have heard about. But I honestly I wasn't surprised, but I was hoping it would get a little more mainstream attention that it did. Only from the stance of, first of all, there are very few standalone bills that pass Congress these days. And that's been a true statement for quite some time.
Yeah.
It is no small feat, but also it was unanimously passed, bipartisan, in both houses. Like, literally every single member of Congress voted for this. It's so consumer friendly. Does it solve the biggest problems that we have in the world right now? No, of course not. But like, I, for one, would like Washington, D.C. to start hitting a few more singles and doubles and stop swinging for the goddamn fences all the time and usually striking out.
Ben.
I think a little smaller picture pragmatism could be blended in with all the fear mongering that we all see all the time, and the world is falling apart. Whether you actually feel that way or not is beside the point, but I control what I control. I'm not on any editorial boards on cable news or newspapers, so it is what it is.
I'm thankful that you did the work for this, because to me, it's that small win, and it's a huge win, but it's a small win going forward with the world that we live in. I answer every single phone call because I don't know which ones are which. And I'm one of the odd agents that actually answers her phone. And most of my phone calls are nothing but people either trying to sell me something about Medicare. Good Lord, I'm not that old yet. Thanks. Car insurance, or can we sell you a car warranty? How many of us joke about this, but I get phone calls from people I know, and I answer the phone, and it's some yahoo who's trying to sell me something.
Yeah, they clone their number. It's
they
unbelievable.
spoof their numbers. And again, you working on this is that small step towards, can we make that illegal?
I hope so. Someone brought that kind of stuff up to me as if it was refuting and supporting the validity of trigger leads. And I'm like, screw them, let's go after Google next. I'm down. Like, that's not a justification. And obviously you clearly feel that way, but I wish other industries would take it as seriously as the mortgage and real estate one did, for sure. And because, like, I'm not an expert in any of that stuff. I can tell you all the reasons that trigger leads were allowed in the first place and why it was written into the Fair Credit Reporting Act, which was written in the 70s. It might as well have been 1,000 years ago, given the technology. And there were, I think it was always a violation of data privacy, even in the 70s. There was at least a valid excuse for it, and meaning that, like, back then, to shop for a mortgage, you had to walk from one bank branch to another, and this was a way for mortgage companies to send you something in the mail. That's not how people shop for a mortgage anymore. And it's not getting mailers. It's been completely bastardized, and it's intrusive, it's invasive, and it was time to put a stop for it and score one for the good guys.
Yeah, and hopefully this will trickle down into even my industry. There are agents, and I was taught this way. I've been in this for 18 years. I was taught this way, that you literally, when a home expires, which doesn't happen a lot anymore, but there are people who do pull their homes from the market that I have to warn them. Their phone's going to ring off the hook again because it's literally going to be people going, oh, that agent couldn't sell it, but we can. And here's how we're going to do it different. They get 15, 20, 30 calls a day just until somebody gets tired and says, drop dead.
You're supposed to be asking me questions. How is their phone number tied to their listing? It's just like the data's just out there and it's all pulled together?
Correct. So usually because of the tax records, and tax records are public, their names are public. So the moment that the listing goes off of the market, it either expires or is withdrawn. Other agents have companies that actually pull that information. And so every single day that a home gets expired or withdrawn, there are agents who are calling at 7:30 in the morning, 7 a.m. You're trying to get your youngins out the door? Are you absolutely freaking kidding me?
Yeah, no, it's ridiculous. And like, I understand you taking the approach of picking up every call, and it'd probably be better for my business if I did, but my phone's on silent. I don't pick up any phone calls anymore because it's insane. It's absolutely nuts. But yeah,
it is crazy. So how did predatory trigger lead practices impact North Carolina buyers, and how does the new law improve that broker-client relationship?
100%, a night and day difference. So now, like I said, when your credit is pulled, you can expect it from thousands of calls to no calls. And in addition to all the obvious things in how we've described it so far, what was happening is like you would explain it to your clients, I would explain it to my clients, and every professional should explain it to them. But like we can all admit that they shouldn't have to, and that plenty of them wouldn't. And it doesn't mean they stink at their job, but they wouldn't properly explain it and warn them. So what would happen is the loan officer would pull someone's credit, someone they've been working with for a while, and that person obviously has some level of trust with them.
Yeah.
And then all of a sudden their phone starts blowing up. And most people would not naturally jump to the conclusion that the credit bureaus, who if you polled most people would probably guess are like government institutions or something like that. They're not. They are publicly traded for-profit companies, okay?
Correct.
And they would never guess that like they would be selling their information. Instead, the conclusion in front of their face is my loan officer did something and then this happened. They must have sold my data. And it would immediately tear down trust that was built for very valid reasons between the professional and the client. Furthermore, when you're talking about first-time homebuyers, first-generation homebuyers, English is a second language homebuyers, many of the phone calls that they're getting, believe it or not, these people are not always the most forthcoming, and they might engage in practices ranging from not telling the whole truth to straight up being deceptive. And when you don't understand how this process is supposed to work, and they say something like, they wouldn't say, I work for McKay Mortgage, that would be illegal, but they would say, I'm calling about your mortgage application with McKay Mortgage. And now it sounds like they work with me, and they get that person to start talking to them. And now it's just at a time when this person probably just went under contract on a home, and they have you calling them. They have a home inspector calling them. They need to do this. They need to send an earnest money deposit. They have a million different things going on, and their phone's exploding. And God forbid they do pick up. It's confusing, and it just gets what's already a complicated, stressful process off to a terrible start. And starting next week, that should all be more or less a thing in the past, unless somebody decides to opt into them, which I strongly recommend against doing. So there you go.
I have to say, if I haven't said it, thank you. Thank you so much for all of this work, because it does make a difference, and it's getting ready to make a whole big bunch of difference. But I want to say thank you for doing that, for taking on that fight 3 years ago and wading through all the governmental BS that you had to go through, because I know you did. So thank you so much for that.
You're welcome. And we were talking earlier, life has ups and downs. This morning was one of those days. I appreciate your thank you more than I would on other days. But I will say that one thing I always like to share, because we've even thrown some shade at DC in general already, and a lot of it deservingly. As far as the governmental process, I'm not saying there weren't a bunch of hoops to jump through or maybe unnecessary bureaucracy, but if anything, this 3-year journey has given me more hope in democracy than I might have had going into it. And that there is still hope there. And it really coming back to the point of this didn't get a lot of attention nationally outside of industry publications and things like that. But There are, first of all, what I always like to remind people, because when they come down and start doing Hill meetings for the first time, they think we're meeting with Republicans and Democrats. And what I like to say to people is housing is bipartisan, right? And they're worried they're going to have these meetings, they're going to have to swallow their tongue and this and that. And I tell them, I'm like, what on cable news and social media, I'm not going to argue whether it's true or not, but what I will tell you, it's not the entire truth. There are over 400 members of Congress. And most people at most can name 10 of them, and there's probably overlap of 7 of the same attention-seeking jerks, right?
Yep.
But there's another 400 something that they are flawed people, but they are serious, they care, but they're too boring for cable news. Want to help.
Yeah.
And that is really the experience in the conversations that we have. Now, don't go look at their Wikipedia or their Twitter, because when you're talking about other topics, you might want to jump off a cliff. But when it comes to like a lot of the blocking and tackling of different industries, they absolutely care, and there's still hope. I'm not saying it's perfect, far from it, but there is still cause for hope. There's no doubt in my mind about it.
I agree, because there are some folks that are up there that do treat it like public service, and that's what it's supposed to be. And I'm thankful for that. But do we usually see them? No, like you said, they're too boring for cable news.
But they are accessible. I would encourage anyone listening to it, if you have a problem on any level, whether it's county, state, or federal, whatever the problem is, reach out to your elected officials. They are there to serve you. And will you get them on the phone immediately? Probably not, but you'll get somebody on the phone and your message will be heard. You can go to Washington, D.C. right now without an appointment and walk into your members of Congress's office and sit there and wait until somebody meets with you. That is something you can do right now. You walk through a metal detector that is far less invasive than it is at the airport.
True.
Your government is more accessible than it feels. I promise you that.
Oh, yeah. So what's the biggest misconception about mortgage brokers, and how does that misunderstanding hurt homebuyer in markets just like Charlotte or Maryland?
There could be a number. To give, like a lot of things, perception and reality sometimes have a hard time catching up with each other, right? And prior to the financial crisis of 2008, mortgage brokers made up about 70% of originations in the country. And the economic crash was caused by the mortgage industry, and we were 70% of it, so we took a lot of the blame. I would say too much of it, but that's neither here nor there. And overnight, it went to single digits. Shortly after Dodd-Frank was passed, brokers made up about 7% of the market. We're now back over 25%, and a lot has changed, although the perception hasn't always, in that things like mortgage brokers might not have control of the process in a way that a direct loan officer might. And that's a surface level argument, and it can be true for some mortgage brokers. It can be true for some direct lenders as well, depending how you run your business.
Yeah.
But if, like anything else, you run your business in a manner that you know what the hell you're doing, you're going to have as much, if not more, control than others. The more baseline one, though, that a lot of consumers come into it, they're like, okay, you can shop with all these different lenders that are out there, which is the difference between a broker and a direct lender or a bank. But like, how do you get paid? And as if I'm an additional layer in the process, which again makes sense on the surface level, but it's the same as any other difference between retail and wholesale. The same lenders will have retail channel, wholesale channel, and they'll provide different rate sheets for each. And wholesale prices are lower. That's not, people know that in any other industry. And the exact same is here. And then it's my job to keep my margins tight enough to fit within those rate sheets, where regardless of how I get paid or how much I get paid, I'm offering you a better deal than you're going to get elsewhere. So it's not some additional cost that's not already baked into it and things like that. Those are the two that come most to mind. But like, really my best advice to any consumer when it comes to the mortgage process is shop around.
Yep.
Learn how to shop. A lot of places will make it confusing. Do not respond to pressure from loan officers. Right. That is a really big red flag in my opinion. If they're pressuring you to make a decision, work with me, work with that person, it's not in your best financial interest, I would say run to it. Price matters for sure, but professionalism does too. Don't just go bottom barrel. You're going to get what you pay for, although sometimes the lowest price is providing the best service at the same time. So shop around. And like anything else, I think a lot of times it makes a lot of sense to shop locally, especially if you're buying the home. The difference being is that a local loan officer, I don't care whether they're retail or wholesale or whatever channel they are, if they're local, it means their reputation matters. When they're writing a pre-approval and their name is on it, the agents in that area, they know who can close a transaction, who can't. And as I sit here in my local market, if I start developing a reputation of somebody that doesn't close on time, that is a massive problem for me. And I have a lot, and as such, it means I am accountable.
Correct.
If I'm sitting in some call center half the country away, that same level of accountability simply doesn't exist. And as a result, you are likely to get a worse service and you're less likely to close on time or maybe close at all. So I would stick local, especially when you're buying, and shop. Definitely shop. It's a big financial decision.
That's one of the things that I tell every single client. I have a list of folks that I give them, and there's usually 5 or 6 on there. And I tell them, I said, call every single slap one of them. Talk to all of them, because the moment that you pull your credit, it comes up as one credit pull. As long as you do it within, and I tell them 2 weeks, 2 business weeks. Now, I know there are some lenders that say you can do it within 30 days, but I'm like, we want to tighten.
That advice. It varies on the bureau. Each bureau is different with that, and 2 weeks is the shortest window, so you're giving the best advice.
So that's one of the reasons that I tell them, I said, you need to do it all within these 10 days, because one, you might get a really low rate from somebody, but you don't click with them, and that's okay. So, but get it in writing, because then you can show up at the other guy's door and go, look, they gave me X%, and they might be able to match it or beat it.
I squeeze polite, be polite, but dude, hell yeah, squeeze them. And you do that, and somebody pushes back on you and starts getting defensive, that's insecurity, frankly, coming out, run. Yeah. Run from them. I tell my clients all the time, I'm like, I expect you to shop. Like, this is a massive financial decision, and if you don't, you're a crazy person. So I go into it expecting everyone to shop. I teach them how to shop, and I say, if you see a better deal, send it over to me. A, there might be something you're missing. B, the market moves every single day, so you could get a quote from me on one day, someone else on another day. But C, like, I place my margins in a place where I know I am usually going to be the best deal, but not always. And if you see a lower one, I'm not going to act like I've never matched or beat someone else. I'm not going to negotiate against myself either.
Correct.
But I'm not going to act like it's never happened. And then that puts all the onus on me. And my job, I don't see it. I don't expect people to work with me if I am not there. It's not in their best financial interest. What I hope is that the level of professionalism and service that we provide, which they don't even know about until they're under contract, but like, they can feel it exuding out of me, and I'm educating them to the point no one else does, so that they come back to me and say, hey, Brendan, we love you. We really want to work with you, but this other person gave a better deal. Can you match that? That's a reasonable expectation, and that's how I operate. And I would encourage anyone listening is speaking to a loan officer that doesn't take a similar, even if they don't say it as nicely as I do or whatever, if they don't have a similar attitude, that's a red flag.
Exactly. And I always tell people, get it in writing, because you guys have to deal with the federal government. And so if the federal government comes in and they are auditing you and you gave somebody a lower rate, they're going to look at you and go, you're cherry picking your clients. Without having that in writing, you can't do anything.
No, 100%. Absolutely 100%. Get in writing, but also get a detailed breakdown. Just saying interest rate, close, cash at close, that ain't enough. Because a lot, and here's what I mean, but when I teach people how to shop, you need all of it. But the only 2 things that you should see all of it, I should say, the only 2 things you really need to shop one quote to the other, assuming that they're the same programs, is interest rate and lender fees. Right?
Yes.
A good loan officer is going to give you estimates on everything else, and they should be very good estimates. But that is somewhere where you're going to see large variations, especially depending on the type of company you're working with, between those estimates. But regardless of what mortgage company you work with and how they're estimated up front, title insurance is going to be the exact same price at closing, regardless of how it was estimated initially. Yeah. So you want to know what all those numbers are, because you need to know a general idea of how much money this whole thing is going to take. But don't use that stuff in comparing one quote to another, or escrow accounts. That is all very tightly federally regulated.
Correct.
Shockingly, I'm allowed to underestimate those drastically. I don't, because it's unprofessional and it's not cool, but not everybody takes the same approach.
Yeah, I give each of my clients not only a list of lenders for them to call, but I also give them a list of questions to ask them. Awesome. Because I want them to be able to shop and shop wisely. And you should be able to put it in a spreadsheet and look at each lender and how it affects you, because your credit score is going to make a difference with your interest rate. But I tell folks all the time, if you ask what fees are associated with this loan, they should be able to say, here are the fees. And the one I give them that is the easiest one to judge is your loan origination fee.
100%.
You have some folks that charge a flat fee, whether it be $11.95, that's almost $1,200, or $1,600, $1,595. But then you also have folks that say, we're going to charge you 1%. In the world where Charlotte, the average price point right now is $400,000, that's $4,000. So a 1% loan origination fee can cost you $4,000, and somebody over here is only charging $1,200. You just saved yourself $2,800.
100%. And also, you want to make sure you're doing apples to apples, right? Because you might get, for example, a 6% quote from one person with no lender fees, and then you get 5.75 with 1% lender fees. And most people walk into it thinking that I wanted the lowest rate possible. But rate and cost, those two things are related to each other. You push one, you pull the other. So in that hypothetical I gave to somebody, I would say go back to the person at 6% and say, hey, what are your costs at 5.75%? They will show you, and it might be quite a bit lower than 1%. Now, that doesn't mean you should go forward with that person at 5.75, but it does mean that they're just cheaper all around, right? Yeah. So you got to make sure that everything is lined up, because interest rate doesn't exist in a vacuum. I could show lower rates all day long with 3 points in closing costs, and yeah, I have the lowest rate, but it doesn't mean it's the best mortgage.
Because most people don't understand that when you're talking about an interest rate, it could be with points, and people go, what in the heck is a point? And why does that matter? Because points cost money. And people are looking at it and going, why does a point cost me $2,000 or cost me $800? Or what is a point? God bless, it could be just you putting a thumbtack on a wall. What is it?
I know. And it's not like points in a game, which are good. They're
yeah. So why should someone who's buying a home here in Charlotte care about what happens in Washington?
I think so. Honestly, I think I want to answer that in the way that you probably wanted to ask it. Yeah. I think everyone would be a little better off if they cared a little bit less about what happened in Washington and focused more on what happened in their local communities and at their state houses. Because A, those things have a lot larger impact on their day-to-day lives than what happens in DC does. But furthermore, they have more control over it. The closer you get to the local level, the more accessible those elected officials are going to be. But what I'd really say is I think people should care a lot. Let me rewind what I said in the beginning. I absolutely do not believe people should care less about what happens in Washington, D.C. I think they should maybe shift their attention on what topics they're paying attention to and which ones they're not, and maybe shift where they're getting some of the information from and making sure they're seeing a full wide scope of different perspectives on it, or just getting the raw news and coming to their own conclusion. But if you're going through a home buying process, absolutely, I think it makes a lot of sense to find out what's going on right now in DC when it comes to the mortgage and real estate world, because you and I both know there's been a lot of changes recently that have a big impact on it, whether it's the trigger lead bill or in your world, I don't know that this is technically DC related, but like the NAR lawsuit, and understanding that fully beyond the headlines, because the headlines, I think we would both agree, if you just read the headlines, you would come to a conclusion that isn't entirely accurate with what's happened in reality. And I think diving into that a little bit would be incredibly helpful. And I think that's a topic in particular that consumers would be better served by being educated on exactly what it means, as opposed to what their gut instinct tells them or what they heard at a cocktail party or something like that. So it's always just better to be informed about what's going on.
How could future policy changes affect mortgage access?
Drastically. So I can name a lot of examples. In the past, I referenced Dodd-Frank earlier, yep, which significantly changed everything that happened in the mortgage world. A lot of times mortgage professionals, if you ask them about Dodd-Frank, they might have a negative opinion on it because frankly, it did make their job harder, but that's a good thing. Our job should have been harder. The barrier to entry was significantly too low in our industry, and Dodd-Frank, I never want to say it fixed it because things can always be better. But if you're looking at what things were like previously to what they're like now, I think saying it was fixed would be an accurate descriptor of it. And something like that could happen again. Right now, the banks are popping off about being able to increase essentially the ratios that they're able to lend upon. To back up for a second, the way that banks lend money, mortgages, and the way that non-banks lend are two very different things. A lot of times people say, what banks do you work with? In fact, the mortgage market is dominated by non-banks. That was a big change coming out of the crash. Most mortgages, about 70%, are written by non-bank lenders, which I think is probably a good thing. Banks, though, do not. They would like to do more of it because banks are limited in what they can lend based on the deposits they have on hand, right?
Correct.
They're doing this constant push and pull where, like me, for example, I can lend in perpetuity because Fannie Mae securitizes these loans and then Wall Street buys them as mortgage-backed securities. That's not something that happens in the bank. The banks are welcome to sell off the mortgages too. They don't want to do that though. But if something like that happened, I think you could see a big shift in the landscape as far as lending options that are out there and things like that. Something we're pushing for constantly. This is oftentimes seen as more of a state level issue, but we are pushing it federally. And that's wider access to down payment assistance programs. And frankly, having those programs actually make sense, which they do in some states and they don't in other states. I know North Carolina's is actually a good one, and we're looking to expand. Right now, mortgage brokers are locked out of that process. But your state's actually Department of Finance, every state has a different technical name for it. Mike Albrico, someone involved in the Broker Action Coalition, had a great meeting with them last week. And they laid out a path forward for it, which is awesome for all consumers in North Carolina, because while this statement is not exclusively true, more often mortgage brokers are smaller. Like, we're the small business leg of the industry. So as a result, more often mortgage brokers are deeply ingrained in their communities. And there are plenty of direct lenders where that is true as well. So I don't want to say it's a black and white situation. My point with that is, though, that you want the mortgage companies that are deeply ingrained in the community having access to the products that community needs. So we're pushing that in all 50 states. We're also pushing it federally because a lot of those programs are funded with federal dollars. And we never want the federal government to step on states' rights, but if they're using federal dollars, that's a little bit of a different story. We're attacking that from a few different angles as well.
So one of the things that we here with my team, we try to teach people is that when you're going to a bank, and I remember when my mom went to get a mortgage, and it was going bank to bank, and you had to know who the loan officer was. The loan officer needed to know who you were, and especially as a female. And this wasn't that long ago. It's, oh, where's your dad? Or where's your husband? Oh, so it wasn't that long ago. So there's a lot of intimidation when it comes to wanting to get a mortgage. And I tell this, especially like with my younger clients or my first time home buyers, I'm like, you're going to rent the bank's money. That is all you're going to do. You're literally walking in and say, hey, can I rent some of your money? And when you walk in, I try to take that intimidation piece away because, one, you don't have to know your loan officer. He doesn't need to know your daddy. He doesn't need to know your husband. He doesn't need to know any of them things unless it helps you qualify. Yeah. But then when you go to the bank and you say, hey, I want to rent your money, not only is it that, but then they turn around and go, all right, I have a loan that is with a good credit score, has a good job, and he's going to pay on time. Who wants to buy this? Because, as you said, they're only lending from the deposits that they have. Yep. And so by going out and saying, hey, I have this loan that somebody else can buy, it gives them that money back and they can turn around and then lend it to the next person. Most people have no idea that there's a secondary market. Yep. And even when they have a mortgage and they're like, okay, I'm paying my mortgage to Bank of America, Wells Fargo, whoever you choose, and then all of a sudden it changes to Mr. Cooper or Carrington Mortgage, whoever it changes to, they don't realize that there is that secondary market. So we try to teach them, hey, just because you're renting somebody's money, that doesn't mean that's who you're going to stick with. And all they're looking at is your numbers.
And you're exactly right. And what I'll add to it is a lot of times people hear that and they're like that. And people get frustrated when their mortgage gets sold. I both understand it, but I'm also like, first of all, they're all the same. Mortgage servicers, they're assembly line style companies. If you make your payment on time, you are very unlikely to have a problem. But if you do have a problem, I'm here to tell you it's probably going to be a pain in the ass to fix regardless of who has it. Yep. They don't care about customer reviews, right? Like you don't get to choose them, which All that sounds negative, but guess what? It provides a massive amount of liquidity in the mortgage market, which leads to you getting lower interest rates. And that is a very good thing. There is a reason that the United States has the most stable mortgage market in the world, and it's not even remotely close. And the way that we have mortgage servicing set up and the existence of 30-year fixed, the last time I checked, the United States is one of 2 countries in the world that has a 30-year fix. So it's, yeah, I know we don't love all that and that sounds awful. I don't want my mortgage getting sold. It's a good thing. It feels very removed from your interest rate, but I promise it has a massive impact on it.
It does. And that's the same thing that when you talked about Dodd-Frank. I've been in this literally in 2008 when everything imploded. That's when I decided to walk in and become a real estate agent. So I watched as we had 300 and some odd different loan products that people could choose from. And that after 2008, it dropped down to 5. That was it. That's all you had was 5 abilities to be able to buy a home.
And the good news is that because all those millions of products, 90% of them are trash. So those are all gone, which is good. And we had 5 for a while, but
it's starting to go inch up again.
It absolutely is. And the non-traditional market is absolutely thriving. Now, when people hear that, it's, return to subprime Alt-A. Absolutely not. That's almost offensive, honestly. Subprime and Alt-A were just like liar's loans, basically. You could say whatever income you wanted. There's a whole market. The easiest one to explain is it's called bank statement loans for self-employed borrowers whose income in reality might not always be accurately reflected by their tax returns.
Exactly.
And so what these products do is they look at 12 months of bank statements, money coming in, money coming out, and there's no truer testament of your income than something like that. And now, will Fannie Mae and Freddie Mac buy it? No. Will a bank secure it? No. But that's a good loan. That's a loan that's based in reality, right? And the pricing on that has gotten really competitive. Like just as recently as 4 years ago, I would tell someone, sorry, Mr. Self-Employed person, like I can't qualify you traditionally at 3%, but here's this 8.5% interest rate. And they would tell me to kick rocks. And understood, but I was like, rent is infinity percentage. I still think you should take the 8%, but okay, whatever. Now it's the different. It doesn't hurt that the one side has come up too. It might be the difference between 6% and 6.5%.
Yeah,
they've gotten really competitive, and they're good loans. They're stable. Like I'm not worried about them blowing up the mortgage market or our economy or anything like that. Wall Street is starting to get back into the mortgage world in a solution-driven way that actually makes sense and is stable and is helping more people become homeowners. And it's a good thing.
It's a fantastic thing. What lessons have you learned from passing federal legislation that apply directly to building a successful real estate or mortgage business?
It was almost the other way around. And it's what lessons I took in talking to consumers about mortgages and then took that to Capitol Hill, and meaning that I took over 200 meetings with congressional offices on the trigger lead bill, and every single person I sat down, with the exception of maybe 1 or 2, like I said, were serious people. They cared. But guess what? They had a calendar full of people coming to them with problems ranging from all sorts of different topics, and it's impossible for them to be an expert on all of those. Yeah. So they were relying on me, in this case, to be the mortgage industry expert. Right. In the same way that I'm explaining how a mortgage works and how the home buying process works to a first-time home buyer, I can't assume that this person I'm talking to really understands the same. Do you know what a mortgage broker is? I don't care what they say. I'm going to explain it, because even if they say yes, they probably don't, right?
Correct.
It's starting at a low baseline, and a lot of times people can get really frustrated with their elected officials for not fully understanding the problems that they're facing, but you have to explain it to them. They are smart people and they care, but they can't know everything. Yeah. So the same way I did in my business, I spend a lot of time focusing on a mortgage is unbelievably complicated. Nobody wants one. They get one maybe once every 7 years. It doesn't help them in their life otherwise. It's not helpful information to carry around. So I put a lot of time in focusing how to explain it efficiently, quickly, in a way that makes sense. And it was the exact same thing with, in this case, a trigger lead bill. Like, just as I explained it to you, when you get your credit pulled, here's what's happened. Here's why it's happening. Boom, boom. And I think if you take a pragmatic approach and try to take as much emotion out of it as possible, don't be a robot, but don't lead with fire and brimstone either. Correct. Or else they're just going to not take you seriously immediately, and help them do their job. Their job in DC is to solve the problems that are brought to them. and help make it easy for them. Don't just bring them problems, bring them solutions. And I think in a nutshell, those are probably the easiest one. The other is, especially as a small business owner, I compete against big businesses all the time, but like we got a lot of this like David Risk-Goliath stuff, like with the trigger lead bill. You'll never pass it. The credit bureaus are too powerful. And first of all, like the back wasn't the only one fighting this. We might have been at the tip of the spear, but other groups and associations were as well, and other companies. Rocket Mortgage was a big advocate for the trigger lead bill. Rocket Mortgage, nice. We're not talking about small potato stuff over here, right? So that's the first thing. The second is money matters in DC, and money matters too much in DC, but like we live in a capitalist environment. Money is always going to matter. So let's all just relax a little bit. But being on the right side of an argument matters as well. Money gets you attention, it gets you access, but we're not out here selling whatever industry thing you think is deplorable or whatever. But even though we had less money in the argument, we were clearly on the right side of the argument, and that still matters in DC. Maybe we would all like it to matter a little bit more, but it still matters a little bit. So there are the lessons coming out of it.
So what was the breakthrough moment in the 3-year advocacy journey that proved persistence pays off?
There was times when I thought it was a breakthrough moment and then it wasn't, but really it was obviously when the president signed it, but it was really before that. We knew it was a done deal at the point that it got through the House. In the previous Congress, it had gotten through the Senate. It actually passed the Senate 3 times for weird technical reasons. But last year, when it got out of committee in the House and then there's something called suspended sentence voting in the House when it's a non-controversial bill and you need a 75% yes instead of 50 like normal, but it's a streamlined process. And I was incredibly fortunate to be sitting in the gallery of the floor of the House when it happened. And it was really cool. There was like a small little group. There was a field trip there and the teacher was asking me about it and stuff. And I was explaining it and she thought it was so cool because it was like, she's literally there trying to show them democracy in action. And she's got a good example of something like that happening. It was a really cool, special moment. I went and sat on the stairs of the Capitol for like an hour and a half afterwards. And it was neat. And I knew it would take like something even ridiculous by Washington, D.C. standards for it not to happen at that point. So it was cool.
That's awesome. That's one of the moments that you, like you said, you sit down and you drink it in because you don't get a lot of those.
I know. And I couldn't bring my phone into the gallery, so I couldn't be taking pictures and selfies there. So I had to go sit on the steps of the Capitol for a while and but yeah.
So one last question. Why do some of the 2008 era regulations still limit mortgage options?
I would phrase it slightly differently in that they definitely limit mortgage options, but I would say largely in positive ways. It puts guardrails on things like I just explained. You got to be able to document your income. God forbid, you got to be able to document your income, right? So it definitely limits it, but I would never phrase it in a negative way. I would say in that, and I want to be, once again, say Dodd-Frank was overwhelmingly a positive piece of legislation passed, not only for our industry, but for the country. And that's important to remember. It was passed at a time where it wasn't industry crisis. It wasn't the national financial crisis. It's a global economic meltdown, right? Yeah. Like those are pretty high stakes and they had to do something incredibly quickly. And they put a very comprehensive package together and it rushed and they're going to miss things. So I say all that. A lot of times people are like, they just look at the negative on it and things like that. And they forget the context of when it happened and why it happened and how quickly it needed to happen. But there's a number of things that need to be fine-tuned. And here's a good example of one, the APR calculations. Most people, even if they don't know exactly what APR is, they have a general sense of it. The difference between interest rate on a mortgage and APR, the simplified explanation, is interest rate plus all the closing costs.
Correct.
It's supposed to be one number that lets you easily shop from one quote to another. And it fails in that for a few reasons, but the biggest one that we're trying to solve is the way that APR is calculated varies depending on what type of mortgage company you're getting a quote from, which doesn't make any damn sense. Yeah. So meaning that my compensation as an independent mortgage broker counts towards the APR calculation, even if it is paid for by the lender. Okay. Yeah. And that's also a simplified explanation that if an industry expert is listening to, they might pick apart slightly, but it's largely true. Yeah. And that doesn't make any sense. I could show you an official loan estimate disclosure where the one has a lower interest rate and lower net lender fees, and the other has a higher interest rate and higher net lender fees, but the APR on the better deal is higher. And that doesn't make any damn sense. So we're trying to fix some things like that. The way compensation works in our industry is a little off balance that limits mortgage availability in areas of the country called mortgage deserts. Parts of the country where the average loan amount or home sale price might be $70,000 and maybe people's credit isn't as good as other areas. It's impossible for mortgage brokers to work in those sorts of areas because you just can't make a living. We're limited at 3% of the loan amount in compensation. I sit here telling you the majority of mortgage brokers make way less than 3%. But if you're operating off 3% and you're doing a bunch of $50,000 loan amounts, you're not going to be in business for very long.
Yeah.
We're looking to make some changes in places like that so that, frankly, I'm not going to sit here and tell you like mortgage brokers making more money isn't part of the motivation, but it will open up more mortgage options for people in markets like that. So there's just a couple quick examples.
That's what I was going to ask is what changes could expand consumer choice?
100%. And that would be the easiest one coming to mind most immediately, and just more transparency about how everyone's compensated and things like that. I think it's all a good thing. And that's, you'll notice hopefully a refrain through a lot of what we're saying. And we take this approach. So you're talking about what I learned as a business owner and took it to DC. I'm always thinking about the perspective of the person I'm talking to. And as they should, the congressional offices we're talking about care much more about their constituents and their ability to be homeowners than my ability to make money. So we will frame every argument. We won't even, right now, there's so many problems to fix. If it doesn't help consumers, we're probably just not going to try to tackle it. Because let's focus on the ones that help us, but also help consumers so that we can be down in DC making consumer first arguments, because that's what they want to hear about. And that's how all of us should be front of mind. We all want to make money. But as long as we're out there helping consumers, the second part should come pretty naturally.
Yeah, I've always said everybody's got to eat. There's no reason for somebody to make, so much more when, again, you just need to eat. That's all it is. And you mentioned the NAR settlement that happened 2 summers ago, and people still look at it and go, okay, if we take away the real estate agents' commissions, then the prices of homes will go down. Y'all, really? You really think that, okay, so let's look at it just from the aspect of for sale by owners. Okay, for sale by owner, you're going to put your house on the market and you're going to put it 6% less than your neighbor down the street because you didn't use a real estate agent?
It's like you're breaking even and just doing more work yourself. Congratulations.
Yeah. And I had clients who did it. And I always will walk my clients through any of this, whether you use me or not, because I want them to make the best decision for them. But they were getting ready to list their home. His wife was 8 months pregnant.
Oh my God.
And I was like, okay, who's going to open the door? Because you're going to get a whole bunch of phone calls of people wanting to buy this house. And this was during 2020. So everybody and their brother were looking at a house. I'm like, okay, so who's going to open the door? You literally have no idea who's coming in. And you're going to send your 8-month pregnant wife to open the door? Don't think that's a really safe option. No. Plus, on top of that, they were $40,000 priced too low. So they did end up listing with me. It's the things that most people don't think about. They just think that we're out here to make money. No. And that's not what it is. No. I'm here to hold your hand and walk you through the process.
And you said, I want to advise people to make the best decision possible. And I feel the same way. And now it's my job to make sure I'm part of that decision. And that part of what makes the most sense is working with me. And it's like I tell people all the time. And if that's not the case, that's okay. We part as friends. But I'm not going to sit here and pressure you. I'm not going to do any of that stuff. It's just
exactly.
Like I'll say it all, and then it's my job to prove it. And if at the end of it, you disagree, either one of two things are true. Either you're right or I did a bad job. Yeah. And only one of those things I can control is to get better and better at it.
Exactly.
Or get cheaper, one or the other.
Brendan, thank you so much for your time. We have all your social information so that everybody can reach out to you. I know that there is an advocacy coming up this year in DC so we can get better together. I think you said it was April 20th through the 22nd. If people want to be involved.
Yeah, absolutely. They can go to brokeractioncoalition.com and see it right at the top and see us at work. We usually get a couple hundred mortgage brokers down to DC, spend a day training them on what to say and, far more importantly, what not to say to congressional offices. And then the next day, flood the halls of Capitol Hill and speak truth to power, baby.
That is awesome. Again, thank you so much for your time. I greatly appreciate you being with us and making yourself at home. We will put all your information up, and I just can't say thank you enough.
Hell yeah, Dee. Thank you very much for having me.
Thanks for joining me on Make Yourself at Home. I hope you found insights and inspiration to help you navigate your real estate journey with confidence. Don't forget to follow, subscribe, and share this show with your friends, because everyone deserves to feel at home. Until next time, stay informed, stay empowered, and keep making moves that matter.